Hello, everyone. This is Matthew Frailey, your place for advanced technical analysis, doing a quick rare intraday market update pre-Fed. So we're going to go ahead and get started. As you know, today is Wednesday, May 3rd. We have the FOMC day. So I'm just going to do a quick update on the market since I haven't posted something to YouTube for a bit. So first off, as you know, last week the market had that big rally, and then yesterday the market had that gut-wrenching sell-off. In Monday's newsletter and on the weekend, we talked about the VIX being down in its lower Bollinger Bands, almost closed back outside the Bollinger Bands, but it closed basically right on it. And then you had that black candle on Monday, along with that RSI divergence that produced that big pop in the VIX, which we got on Tuesday, big pullback in the market. And then today the VIX is up a little bit, but that was a good early warning for that pullback on Tuesday. Now, as far as the market, I think our analysis has been pretty damn good. So here's the 2-hour view of the S&P that I've been showing really for the last month. So back in April, we talked about this being a wave 3, and we favored that as a wave 4 pullback, which we got, and then another move up in a 5. We had a little wedge there, little MACD divergence. We labeled that as a wave 3. So 5 of 3, we favored a wave 4 pullback, which we got.
Order
So we were
cancelled.
calling for that pullback,
Order
you know,
filled.
a few weeks back, which we got. And it bottomed out early last week before that big rally as a wave 4. Again, go back and listen to the videos and the newsletters. We favored that as a wave 4. And note symmetry. That pullback off the highs is roughly 120 points. The largest pullback, that wave 2, was 130 points. Covered up a little on this channel trend line here, but did not break symmetry. So we favored another move up in a wave 5, which we got last week on Thursday and Friday. So that played out. Now it's possible that that completed that move. Okay. But we're still, despite that big sell off on Tuesday, as you can see here, price is still within this uptrend channel. Hasn't broken that, and we're still above this pivotal higher low at roughly 40.50. So one of the potential bullish wave counts would have that as wave 1 of 5, and that pullback yesterday is a wave 2 of 5. Now again, you cannot pull back. You really don't want to close below this trend line, but you can't go below this wave 4. Okay, that would negate this one mapping option, this short-term bullish view. Okay, but depending on how the market reacts today to the FOMC and the comments, if we do hold this area, the option is that we're completing a wave 2 of 5, and then we'll eventually go up in a wave 3 of 5. You know, basically something like this. Then you'll eventually get a wave 4, and then another move up. Maybe the whole thing could go up to 42.50, 43.50, some of our target areas that we've had really all year. But that's the thing. We got to hold this channel. We really got to hold this higher low. But this is the one option that could be playing out. So we'll see. But again, guys, obviously, we did a good job about calling that pullback early last week as a wave 4. We favored a move up in a wave 5, which we got, and we favored another pullback because of that VIX being down at the lower Bollinger Bands. So pretty good signals there. And let's just look at a couple other things real quick. So here's a 60-minute view of the S&P, nice clean channel you got here again. After yesterday's little V vertical bounce in the end of the day, we're getting a little chop here, pre-Fed, which is to be expected. So again, we'll see how the market's reaction is after the Fed. Do we hold this channel? A lot of fireworks after the Fed, as you know. And here's a 10-minute view showing some fibs. Again, a little weakness this morning, pre-Fed. Following up on some other things, here's IWM. Small caps, as you know, they broke down from their coil. Back tested the trend line on that big rally last week and sold off. What else do we got here? Regional banks. This is the KRE chart. Interesting area. This is a linear chart. I got a logarithmic chart, similar view, but you have an uptrend line for the 2009 lows coming in down around here. There's also a demand zone in here, so we'll see if it can find some support in this area. This area has obviously been absolutely destroyed, but this is an area to watch, this monthly chart. And moving on, taking a look at gold and GDX. They've been strong lately. Yesterday, nice rally. Basically, so far it's held this support. We got a little stop right there at 33. The ratio has been leading up. And again, this is going to react obviously on the Fed and especially the dollar. But as you know, this area is uptrending nicely. A couple individual gold stocks that I listed yesterday. GFI broke out nicely. And AU breaking out of a little tight coil here. And finally, DRD, that's another one I posted this one on our website yesterday before the break. Nice breakout yesterday, nice follow through today. So there's a couple names. Again, we'll see how the market reacts today. And let's take a look at a couple other things. So here's the KISS system. This system is a proprietary system that I wrote to basically try and hold trending items with a smart trailing stop. So in GDX, the system currently has a stop at 33.40. It went long back here on March 13th. System was also long back here in November before getting stopped out in February, but then it went righted itself and went back long on March. Look at gold itself, GLD. Here's GLD. It went long on March 10th, and it's currently been able to raise its stop. Smart trailing stop 3, 4, 5, 6, 7 times. Logical area for a smart trailing stop right at this higher low area that we have. As far as the major indexes, the KISS system is long there as well on the S&P, the triple Qs, DIA. So let's just take a look at a couple of those. Here's the KISS system on the triple Qs. Again, you can see it went long back here on March 15th. It's been on a raise its stop 5 times. Currently, stop is at 305. Right around that higher low. The same for the S&P 500 and the Dow. Oh, by the way, Apple is going to be reporting earnings. So let's take a look at what the KISS system says for Apple. Here's the KISS system on Apple. The KISS system has absolutely kicked ass on Apple. You can see last year in July it went long. Looks like on July 10th there. Still waiting for this to refresh. Held it until August when it stopped out. It did have a little whipsaw back here in October when it took a long, got stopped out, but then it went long in January here. Right here, and it's been able to raise its trailing stop, a good dozen times here. Current trailing stop, smart trailing stop on Apple is 159.30. Now you may be wondering, well, this is a pretty cool tool for trending. How do I get something like this? We actually have a tool on this on the website that's updated once a day. Let me show you that. So this is available on the website. I'm also going to put it in the YouTube video here, but eventually this is going to be password protected, guys. So we run those KISS systems on all the NASDAQ 100 stocks, all the S&P 500 stocks, a basket of ES of stocks and indexes for the indexes, and well over 100 various ETFs. So you can just simply type in here, for example, let's type in Qs, and all you do is click on this, and it will literally show you an interactive chart that you can zoom in and out of. Move that up. You could see you could see your updated smart trailing stops on pretty much, most anything you want to look at. Let's look at Apple. We need to go to here, NASDAQ 100. And you can see there's Apple. But again, this is updated once a day. So this is a very nice resource for the website, these KISS systems. As far as reversion to mean type systems, they've done well lately as well. Taking a look at some of these, last week we had a couple reversion to mean systems take a trade on SPY. Two systems went long on SPY, exited, and one on ES futures. We had a couple open shorts on SPY and ES. And I manually closed the rest of these positions today ahead of the FOMC. But they were able to also take nice profits mid last week before that rally. All right, guys, let's see what happens with the Fed here, which will be coming up in a couple hours. Have a good rest of your day, and I will have a newsletter tonight. Take care.